Coming up next, we are very honored to have our second keynote interview today with Mr. Fady Abdel-Nour. He's the Global Head M&A and Investments of PayU-Prosus. And also we have Miss Lulu Chen. She's of Asia Investing and Real Estate Team Leader of Bloomberg. And they will chat with Fady on how he sees the post-pandemic investing landscape as well as the potentials for fintech companies. Now, everyone, let's put our hands together virtually, even at home, for Fady and Lulu. The time's all yours. Thank you.
Hi, everyone. So today we have Fady Abdel-Nour, who is the head of M&A at PayU, which belongs a unit of Prosus, having a panel discussion with us. Before we get into our main topics, which include your investment strategy and your portfolio companies, Fady, I wanted to just quickly go over your main responsibilities and do a brief introduction of what you may need to look after as M&A head and what the relationship between Prosus and Naspers is. So could you walk us briefly over through your main duties these days?
Yeah, sure. Happy to do that. So I'll start with the later question. So Prosus is a subsidiary of Naspers. Earlier this year, we spun off all of our non-South African assets into an entity called Prosus, which is now listed in Amsterdam on the Dutch Stock Exchange. And that was basically just to make it easier for investors to access it, because before they had to trade in South Africa, they had to worry about currency volatility around the South African rand and maybe even accessing that market, which is a lot more challenging than accessing the European market. So you can kind of think of Naspers and Prosus as the old Naspers and the new Prosus as fairly interchangeable, but we've kind of started rebranding everything under Prosus. Within Prosus, as you mentioned, our payments and fintech unit is called PayU, and so I lead all our M&A and investment activity around that. A big chunk of my time is looking at corporate development efforts around PayU, which is a payment gateway, payment processor in about 30 markets globally, 7 markets in LATAM, a handful of markets in Central and Eastern Europe, 3 markets in Africa, and then a few markets in Southeast Asia as well. And then, of course, India, which is our biggest market and about half our volume. So I spend a lot of time looking at M&A and strategic investments to bulk up that business and enhance that business. But I also have a chunk of time where I'm looking at interesting fintech investments on behalf of the Prosus Group. Generally more consumer-facing investments, look at payments, alternative lending, wealth tech, insurtech, digital currency, blockchain, etc. And more of a focus on emerging markets, although we do a few things in developed markets as well, where there's really disruptive technologies. It's a really interesting role because I'll do anything from very early Series A, $1 million type investments, and we've looked at things in the billions as well. So that's kind of the remit for the role.
I see. And then for your role as an investor, are you looking at financial investments mostly, or does the business always have to have some kind of synergy with your business at headquarters?
So it's a little bit of a mix. I'd say, generally speaking, we prefer investments that have some sort of strategic angle. There is a bucket for pure financial investments if we think things are very disruptive. As an example, we've invested a lot in digital currency and blockchain, which might not have synergies with the business today, but we want to make sure that we don't wake up one day and have the business be disrupted by something in that space. So we've had some investments there which are not exactly synergistic, but help us keep pace of the market. Naspers also broadly is an investor, right? It's an investment holding company. So there is, some remit for financial investments, but more and more we're really focusing on building out PayU and building out that as a strategic platform and a payments entity for the Prosus Group. So more and more my time is focused on that these days.
And in terms of region, is there a specific region that you're really paying a lot of attention to, traveling a lot to these days?
I mean, I'm not traveling anywhere these days, unfortunately, but there is a region where I'm spending a lot of time, and I'd say that's India. India for the Prosus Group is quite important. We're investors in Flipkart before that was sold to Walmart. We're investors in Byju's, which is a big ed tech business. We have an investment in OLX, which is a big classifieds business, and then of course PayU, which is our payments business there, is about has a strong market share, and it's about half our volume globally for PayU is PayU-India. So I'd say I'd spend more than half my time there. We've made investments in payments and credit, in wealth tech, and have looked at various other sectors as well.
So I'm sure our audience is really interested in your relationship with Tencent. It's a really lucrative investment for you guys. And are you still working closely together on the business side? And also, what does the investment strategy work like when you work with them?
Sure. Yeah, maybe just for some background for the audience, I can't take credit for this, but we invested in Tencent back in 2000. We put $35 million into Tencent, and that's now worth upwards of $200 billion. So probably one of the better venture investments out there. We still own 31% of Tencent and didn't sell a share for the first 18 years we held that investment. So as you can imagine, that leads to quite a close relationship. I'd say it is more so on the investment side where we trade notes around various assets, especially around Asia. I think, as we talked about a little earlier, a lot of the investing I do tends to focus a little bit more on having a strategic angle, where Tencent tends to have a little bit more of a broad mandate as they look at things. So there's been a few occasions where we've partnered and invested together, but generally it's at least kind of trading notes and discussing the merits and the investments, and we still keep that close relationship. In terms of operating, I'll say that's a little bit more ad hoc, where we look at where we can benefit each other, and the various operating units do have some links, but I think those are really I wouldn't call it kind of a defined partnership. It's something just we see if it benefits either party, we'll work together. But of course, those kind of introductions and relationships are easy to make.
You mentioned earlier that you're very active in India. With the tensions right now between China and India, are you seeing any fallout or any impact on investments from Tencent, for example, or other Chinese companies? And what does that mean for you or other investors who are interested in the market?
Yeah, it's funny. We've actually seen a fairly big impact, fairly quickly, where a lot of the money that was coming in that market was, Chinese money, whether that's corporates or funds. And now with them not being able to invest, I'd say the market's gotten a little bit less competitive, and that leaves room for folks like us. I'm not going to say it's tremendously less competitive, because India has always been quite a competitive market, but it does feel like there's a little bit more breathing room, especially when combined with some of the COVID effects. So we have been trying to take advantage of that. There's folks like Tencent and others who may see assets in that market that they like, that we partner with, and not being able to invest. And so they may say, you should look at this or you should look at that, which also leaves room for us. And there's also assets in that market with, Chinese investors that may not be able to double down and keep providing them capital. And so that also leaves room for folks like us to come in and maybe be that capital partner when someone else was previously that capital partner.
And for the COVID situation, how has that changed your investment strategy?
Yeah, so I think COVID has had a mixed impact on our portfolio. I think, generally speaking, the areas where there haven't been very extreme lockdowns, our digital payments business of PayU actually accelerated and did quite well, as the trend towards more online ordering and e-commerce accelerated. So in lots of parts of the world, that's helped. In places with very strict lockdowns, such as India and South Africa, I think the business got hurt a little bit more. Although I think as time went on, a lot of those lockdowns became less strict, and so we've not kind of now recovered, and the trends towards online ordering and e-commerce have probably offset some of those initial impacts. So that's how the businesses have performed. In terms of investing, I think we really took a cautious view towards the beginning of this, as a lot of investors did, and really kind of focused on doubling down on our existing portfolio companies. We led around the summer in a company called Remitly, which is a digital remittance company based out of Seattle, which just exploded during COVID, with people not wanting to go to MoneyGram, Western Union, et cetera, and really using digital channels. And so we led around there, and then that business continues to do well even after we did that. And then we're looking at a few other assets that we have right now that have accelerated due to COVID, and perhaps putting additional capital there, because those are the businesses that the best, and the ones that we've focused more on during this time, which is something that I've heard a few other investors spend time on. So I think just the pace of activity and our risk appetite has probably decreased a little bit during the stretch.
Yeah, so sticking to the companies that you've already done due diligence on and what you know best, and doubling down on those investments, how has the U.S.-China tensions affected the fund flow and also investment landscape here in Asia?
Yeah, I think it's a similar story to India, where although the comment I made about India getting less competitive really doesn't apply in the U.S. because there's just so much capital there as well. But there has been a few instances of folks looking at investments in the U.S. from China that they haven't been able to consummate, and so they've referred them to us or said you should look at this company, or in cases where we've wanted to bring a partner in where it hasn't been possible in those cases as well. So I think it's probably impacted others more than us on the margin. There's probably a little bit more opportunity for us in the market because of some lack of Chinese money coming in, but I don't think it's been a massive contributor.
I see. Everyone's looking at the IPO, which is about to happen in November, early November. How does this IPO change the landscape for fintech investment? And with giants coming out like this, what are investors looking at as the next generation of technology for fintech investment right now?
Yeah, I think the last, I mean, I was going to say 12 months, but it's probably been 24 or even longer, months have been just great for payments and fintech in general. I think over 60% of venture funding has been into fintech over, the last 18 months, at the going into 2020. I think 2020 has been a weird year for all of us. So I think, payments have already had a lot of investor interest. And so, and coming to market with the biggest IPO ever, and just being a very well run company, having reaches into various areas of fintech, I think is just increasing the awareness of fintech more so than it already has. So I think this is only going to be positive for the sector. It's going to draw attention for people that weren't looking at it already, and we'll see how it does. But I expect it's a company that's been run well, and so I think as people follow it and see what it's done, it can only I think be positive for other companies in the sector.
Well, and Tencent alike, their strategy has been pretty much a platform strategy where they're doing everything from credit lending to credit scoring and also wealth management. Um, what are the next batch of fintech giants going to look like? What are those companies focusing on right now?
I think we spend a lot of time thinking about this and trying to draw lessons from folks like Ant and from what Tencent's done with WeChat, which has built out this big platform that's been very ubiquitous and plugged other services into it. I mean, I think unfortunately, it's a very kind of unique example, and there's very few other people that are going to be able to replicate, a billion and a half user base that's very engaged, that uses it daily. 90% of people that use WeChat payments, which is just a phenomenal, attach rate that we don't see anything else. The only other example we've kind of seen of this is M-Pesa in Africa, where the telco that launched it had a 70% share of the market, and so it was easy to distribute it into the hands of everybody else. But these are, I think, the holy grails of payments, and I don't think it's something that other people are going to replicate. So I think really what we're going to see in the next phase is not kind of these massive winner take all models. I think you're going to have multiple winners in various markets. You're going to have these digital banks that are coming up that are starting with either payments or deposit taking and then extending into credit, and then from there maybe some of them will look to Robinhood type services, some of them will look to insurance, some of them will look to more of like a betterment traditional wealth management type service, and over time they might add more of them. But I think that's really what the digital banks are going to look like, more so than kind of a WeChat Alipay type model.
I see. So it is a rare investment opportunity that you actually capture. You capture one of the giants. You mentioned that your investment in Tencent, you didn't sell a share for 18 years So is that kind of a general investment strategy that you have for your portfolio companies right now? What is the term that you usually hold for these investments?
Naspers and Prosus generally, it's all invested in kind of corporate balance sheet money. So we don't have a fund, we don't have LPs, and so we don't have pressure to exit. So generally speaking, the way we approach it is we're going to go into a company. If we like that company, we're going to keep supporting that company and keep providing capital and partnering to that entrepreneur. Over time, we may even buy more of it. We may buy control of that company and kind of take it in house, but just keep funding that entrepreneur to building out great things like he's done in the past. And so that's generally our strategy. I think at the same time, if we have assets and the market's getting ahead of itself and we get great inbound offers, I think we listen to those. I don't want to speak too out of school because I just focus on payments and fintech, but I think Flipkart in India was an example of that, where we loved that asset. We wanted to hold on to it for a long time, but I think the offer that we got from Walmart was just one that we couldn't refuse at the time. So I think nothing to do with that. So our general holding period is, as long as we think the returns are still great.
I see. For your investment model, are you still planning to keep everything within the corporate? All the money is going to come from corporate. Is that the plan going forward? Because SoftBank coming into the market, they really changed the investment landscape.
Yeah, I don't think we really have any plans for kind of a Naspers Vision Fund or a Prosus Vision Fund going forward. So no, I think we're going to keep investing with the model that we had.
I see. And in terms of the fact that you don't have to talk to university endowment funds or pension funds, how does that affect you as an investor, or what is your what is your unique advantage because you don't have to go and talk to these?
Yeah, I think it's more so that we don't have a fun life, right? I mean, we still have shareholders because we're a publicly listed company that we're accountable to, and they're want to see certain things, and so we listen to those investors. But I think it's because we don't have a fixed finite life and we don't have to return capital after a certain amount of time, that we don't have those pressures. We can really take a long-term view across the group, and in payments and fintech. We're investing in places like India, like Africa, Latin America, where you have a ton of unbanked and underbanked, and we're taking a look at really helping people get access to financial services, helping people get access to banking, access to credit when they wouldn't normally have it, and these are areas which will take a tremendous amount of time to grow and have an extremely long runway, and that's generally been our model. And so when you take kind of really that long-term view, where it could take 10 plus years to generate kind of growth and the kind of penetration that's being seen in China or the US, it really kind of gives you that flexibility to hold on and see it through when you don't have to answer to folks that say, what's the latest round? When are we getting a return of capital, et cetera? So it allows us really to take strong secular bets on what we believe in.
So Fady, our audience here mostly based in Hong Kong, and a lot of them are interested in creating their own fintech startups. What would make their companies their ideas more attractive and increase their opportunities of getting funding?
Yeah, I think fintech is a really interesting area because there's just so much opportunity. If you take a look at the market cap of publicly traded companies, I think almost a quarter is financial services, right? So there's just a lot of opportunity up for grab. So I think that's one, just kind of thinking about that market and where they want to play in that market. I think too, what's made a lot of fintech startups successful is just the incumbent banks have really not done a great job in serving customers, right? And I think it depends on the market. In some places, it's better than others. But I would say in Hong Kong, there's definitely kind of that opportunity because a lot of the big banks, the HSBCs are, big and incumbent, and hopefully they're not a sponsor here or anything like that. But I think, there's kind of room to take share away from some of those banks. So, I mean, kind of taking those two things in perspective, I would encourage people to think about, what area they want to focus on that is being underserved or not served in the best way for their customers. And so once they can kind of create a better user experience, they'll be able to draw some of those customers away from the large incumbents or attract them to these type of products for the first time. And then once they've done that, I think the other step is just to make sure they're doing it profitably, right? Because there are a lot of margins in financial services, and people can get into the trap of giving things away, doing a lot of cashbacks to attract customers, and just never really recouping that profitability. So it is something that we pay attention to. It might not be something that everyone pays attention to who's just focused on growth, but I think especially in financial services, there's absolutely the ability to serve these customers profitably. So I would say those are the two things, and if I can add a third, because it's always good to have three things, is you know these days with the technology and data that's at people's fingertips, you can really differentiate yourselves from these incumbents by taking a different technology lens and taking a different kind of data lens as well. And so, the extent that you can do that, you put yourself miles ahead, because people are going to do this in the future, and kind of leverage this. And it's best to really think about how you can use all these sophisticated tools at your disposal to build a sticky product offering for your customers.
So just as a follow-up, does addressable market matter? Here in Hong Kong, there's only 7 million people, and they'll probably be playing a very different game from the Tencent and groups of this world. What is your advice on how to build a startup here in Hong Kong?
Hong Kong's a really interesting market that's similar to some of the other places, like Singapore, which is a jumping off point for Southeast Asia, or even Dubai, which is a small market but a jumping off point for the Middle East, or even Israel, which is a small market, but those technology companies tend to expand globally very quickly, because of the size of those markets. So I would really encourage people to think about serving Hong Kong first. Really do focus on that market, and think about serving it profitably. And once you can do that, don't be afraid to kind of expand into other areas. I think China is a natural extension for a lot of folks that are in Hong Kong. I would caution them that that's a very competitive market, and very sophisticated, and there's probably other startups that have tried to do something similar. So really research that market, and think about what the edge is there. But Southeast Asia, is an area where it's probably less competitive than China, and there's tremendous opportunity. So that would be, I guess, in a nutshell, my two pieces of advice. Get Hong Kong right. So don't shortcut Hong Kong. Make sure you focus on that, and test everything appropriately here. And once you're there, I think you can quickly think about going abroad, and capturing these very large population bases that are on our doorstep.
I see. So use Hong Kong as a test zone, and launch from here to other markets in either Southeast Asia or China, which is a very competitive market. Well, on that note, thank you very much, Fady. Thank you for all your insights. And
great. Thank you for having me here today.